I want to welcome Tami Lee, who's going to share some of the 2020 tax changes that are coming up because of COVID-19. Thank you for being here or for watching this afterwards. Tami, you can just take it away.
All right, very good. Well, thanks for having me this morning. 2020 is going to be a bit of a crazy year with taxes. So just wanted to go over some of the tax changes, make sure everybody is aware of that. For those of you who don't know me, I do own the Liberty Tax service here in town. And I am looking forward to helping as many people as I can with all the kookiness that's going on. Okay, so the first thing we're going to talk about today is the economic impact payments, also known as stimulus payments, also now known as recovery rebate credit on our 2020 tax return. So there's lots of different names for all these things. So everybody is kind of familiar with the first stimulus payment that went out. Of course, that was $1,200 for single folks, $2,400 for married filing jointly, and then any qualifying children under 17 years old got an additional $500. The second stimulus that just came out at the end of December was passed is $600 per taxpayer and qualifying child. And again, that's under 17 years old. The reason for the under 17 years old is if your child qualifies for the child tax credit, that law is also under 17 years old. So if you have an adult dependent or you claim a parent as a dependent or any of those things, they would not qualify for any of the economic impact payments. So the income limits are pretty much the same as the first stimulus. If you're single, it's $75,000 and below. Head of household is $112,500 and below. And if you're married filing jointly, $150,000 and below. Now, if you are above any of these income limits, you may still qualify for some stimulus, but your payment would just be reduced by 5% of the amount that your AGI exceeds the threshold there. And you also may still receive stimulus checks for your children under 17 years old, even if your amount is zeroed out. You do have to have filed a tax return to receive these payments, unless Social Security is the only income you get, Social Security or Social Security disability, SSI, if you are veterans disability, any of those, you will automatically receive the stimulus payments direct deposited in the same account that you receive your Social Security and those other benefits, again, as long as you don't have a requirement to file a tax return. It's first, the stimulus was looking at your 2019 return status. If at the time the payments went out, you had not filed your 2019 tax return, they then went back and looked at your 2018 tax return. But either your 18 or your 19 had to be completely 100% processed by the IRS for you to qualify for the payments. You can't be claimed as a dependent. If you are claimed as a dependent and is 17 years or older, then you do not receive a stimulus check. Again, it's only dependents that are under 17 years old that will receive that. Most taxpayers received either a direct deposit or a check. It was the same method that you filed your tax return. So if you filed your tax return, either 18 or 19, whichever one it's basing it on, and you received a check in the mail as a refund or you owed money, then you would receive a check. If you had done direct deposit on either one, you received a direct deposit. At least that's what happened with the first stimulus. The second stimulus has been very much different. There have been a lot of issues and a lot of problems and a lot of errors. We have had several people who got their first stimulus check direct deposited, no problem, easy peasy. The second one, for some strange reason, is being mailed to them. And when you get it in the mail, it could be either a check or a debit card. And again, the IRS is not telling us why it's a check or a debit card. And they're also not telling us if it's a check or a debit card. So you've really got to be going through your mail and making sure that you're looking for these, because they come in a plain envelope, and it kind of looks like junk mail. So the first stimulus, we had a lot of people that just kind of tossed their checks in the trash because they really didn't think it was a true thing, or the debit card. Most important thing is checking the irs.gov status. There's a button on the homepage that says Get My Payment, and you can check there and see the dates and which method your stimulus payment came. So it'll show your first stimulus and the second stimulus, and it will have a date on there that either the direct deposit was made or that the check was mailed out. Most of the checks that we have seen had a January 6th mail date on them. And quite frankly, people have seen very few of those. The mail is so far behind. There are a lot of issues right now. And so a lot of folks, unfortunately, have still not received those, even though they were mailed back on January the 6th. So got to keep looking. What do you do if your address changes or your bank account is now closed that you did your first stimulus on? You've got a couple of options. So if your bank account was closed, they are then supposed to change that to a mail check. If you still do not receive it by the time that you are ready to file your taxes, then you're going to file that as a recovery rebate credit on your 2020 tax return. So basically, if you don't receive your stimulus check by the time you're ready to file your taxes, you are going to file that second stimulus or the first stimulus, if you never received it, as a refund on your 2020 tax return. Offsets. The first stimulus check was only offset because of people owed child support. That was the only reason. And then the second stimulus check, the IRS has told us should not be offset for any reason. So, people will say, oh, I didn't get my stimulus check because, I owed back taxes. That's not the case, so you may still receive that stimulus payment because they did not take that for any back taxes. Your stimulus check is also not taxable, so you do not have to pay taxes this year on your stimulus checks. Scams. So there are a lot of scams out there where people are saying, oh, I can get you your stimulus check faster, or, I can do something. I had a client texted me the other day and said, oh, I got this email from the IRS about my stimulus check. That is just not true. The IRS will not call you. They will not email you, and they will not text you. They may send you 1,000 letters and they'll send you certified letters, but they will not contact you by any other method except those letters. So if somebody's trying to tell you, oh, I can get you your payment faster, or I can get you your refund faster, or, you get something in the mail and you feel like it's just not a real check or not a real debit card, either consult your accountant or let me take a look at it, and I'll be happy to verify for you if it truly is the real thing. So a couple other new tax laws this year. Charitable contributions, of course, they were trying to spur this on with COVID. Typically, with the 2018 tax law changes, folks to be able to claim their charitable donations had to be able to itemize to make those count for anything, if you will. But this year for 2020, if you donated any cash donations up to $300, you can claim that $300 as a deduction without having to itemize. So it is $300 total. For 2021, if you're married filing jointly, that amount will go up to $600. But if you're a single filer, that $300 will still remain in effect for 2021 also. So a lot of people really haven't been keeping track of their charitable contributions because they didn't think they could itemize any longer with the increase in standard deduction. But this year, you need to have those charitable deductions so that you can claim that $300 or up to $300 if you donated that to a qualifying organization. Now, qualifying organization is not a GoFundMe page. It's not something that you help somebody up the street. It has to be an actual charitable organization. It can be a religious organization, any other certified charitable organization that you donated to. For 2020, the limit was also increased from 60% of your AGI to 100% for any cash donations. So, for example, if you made $20,000 and you decided you won the lottery and you wanted to donate the exact same $20,000 to a charitable organization, you could do that and claim 100% of that on your tax return. Your retirement fund. So a lot of people, had a lot of hardships in 2020, obviously, with unemployment, being laid off from jobs, things like that. And people may have had to take some distributions out of their retirement funds, out of their 401ks. And the Congress decided that they would give some breaks on that for people who were put in a tough situation that they had to pull money out. So up to $100,000 of any distributions that you took can be deemed as a coronavirus related distribution. That means if either you were diagnosed with COVID, your spouse or a dependent was diagnosed with COVID, or you experienced any adverse financial consequences because you had to quarantine, you were furloughed, you were laid off, your hours were reduced, or you couldn't work because of lack of childcare. A lot of people were put in that boat with having to do the virtual learning and things like that. So with that, if you designated that distribution as coronavirus related, number one, it removes the 10% penalty that you would have received if you're under 59 and a half. So that penalty is removed. And then even though the distribution is still taxable, you can spread the tax that you owe over a 3-year period. So you don't get hit with all that tax in 2020 on it. So, for example, let's say you had to take a $30,000 distribution out because you were out of work or you got laid off. You could take $10,000 each year and just pay the tax on that $10,000 instead of having to pay the $30,000 all in one lump sum. And you can actually, if you repay that amount to your fund before the end of the 3 years, you can avoid the tax altogether. So basically, you kind of took a interest-free loan from yourself if you can go ahead and put that money back into the fund before the 3-year period ends.
Question for retirement.
Yep.
Generally speaking, if somebody were to do that, is that a question just with their tax person or with their financial person that has that retirement account?
Yeah, I mean, it could be both. So, your tax person is going to really just focus on the tax implications of it, and what you may owe, you definitely want to kind of check with them and say, hey, I might need to take $20,000 out of my IRA. What kind of tax am I going to owe? But then your financial person is going to help you as far as taking the actual distribution out and how to do that, or if you want to roll it into something else, and then what the financial implications would be long term of taking that amount out of there.
And then
so it's probably good to contact both of them on it.
Good point. And what's the best way to kind of have in mind for them to start keeping track of that so that they can provide that information to their tax person within that 3 years?
Yes. So what you're going to do is you will have a form that is a 1099-R, and that is going to have the distribution on it. So if you took out, let's say the $30,000, then during that tax year, you will have a 1099-R form that shows the distribution and the amount. And then your tax person will know to spread that out over the 3 years. Then if you contribute that amount back to the IRA, you are going to get a form 5498, I believe it is. And that form is going to show where you returned the distribution back to that fund. Okay, so you're going to have all those forms that will go on the tax return. So, you don't really have to keep track of it because you're going to get those forms that are showing exactly what you took out and exactly what you contributed back. So you don't have to pay that tax amount back.
Okay, thank you.
Yeah.
I have one more question, if I may, about that.
Yes, absolutely.
This is only if you took an emergency distribution. If you're, say, already retired and you normally take distribution from your 401k as your income, can you spread that tax penalty out over 3 years, or is it only for emergencies?
Yep. Well, there's a couple things on that. So number one, if you were on the RMD where you're already retired and you're taking that required minimum distribution, that was actually suspended for all of 2020. So if you did not want to take it because you didn't want to pay tax on it, you could stop taking it. And just not take it, so then you don't owe any tax on it. As far as an emergency situation, it really doesn't say that. What it says is if you were diagnosed with COVID, your spouse or your dependent was diagnosed with COVID, or you had a hardship because of loss of financial resources, furlough, laid off, less hours, or that you had to stay home and could not work because you were staying home with lack of childcare. So it could be any of those. Doesn't necessarily have to be that, you're having such a hardship, but if you were diagnosed with COVID or your spouse or dependent, then you qualify under that rule to do it.
Wow.
Yeah. Okay. The next one that changed some was net operating losses. So, of course, unfortunately, a lot of businesses took losses during the 2020 year. When the TCJA, the Tax Cuts and Jobs Act, was passed for 2018, those rules disallowed carrying back any losses, but you could carry forward your losses indefinitely. But the losses were limited to 80% of your taxable income. So you still couldn't bring your income down to zero, even if your losses were greater than what you brought in. So one of the changes at the end of 2020 was that any losses from 2018, 19, and 20 will now be permitted to be carried back for up to 5 years. A taxpayer can still forego that and carry the loss forward if they prefer to indefinitely. But this is kind of a quick way that people could get some refunds possibly by carrying back their losses up to those 5 years. Also, for 2019 and 2020 so far, that loss can be offset to 100% of their taxable income. So they could possibly take their income all the way down to zero instead of the 80% that was posed under the TCJA Act for 2018. There's also a temporary rule for 2020 for earned income tax credit and additional child tax credit. So taxpayers who have children and qualify for those two credits, let's say this year they didn't really work that much, but they had a lot of unemployment. Well, unemployment does not count as earned income. It's unearned income. So in a lot of cases, folks would see their earned income credits really drastically reduced. So Congress put into place a law where if the earned income credit from the preceding year, so this would be for 2019, was higher than 2020, then you can actually use your earned income from 2019 to calculate the credit so that you're kind of balancing out more even to what you had received in 2019. And we've really seen, even just so far in this short couple of weeks since tax season started, where that is benefiting a lot of people because a lot of people, their only income in 2020 was unemployment. And if it was, that would take their earned income credit down to zero. So it's really been a benefit for a lot of people to be able to use that 2019 earned income figure. And that's it. This is my contact information. And if you guys have any questions, you can call me, email me. And if you have any questions now, I'm wide open. I'm all yours.
I do have one question again.
Sure.
On the charitable contribution, where you can claim up to $300 without itemizing, what proof do you need to claim that?
Yeah, you do need to have, if you've got a receipt or a check, canceled check, any of those things works for it. Since it's only cash, it's not, we usually put charitable contributions into two buckets. There's stuff and then there's cash. Right. So if you have the stuff part, that's still going to go under the itemized deductions. Credit card receipt, canceled check, any of those things will count for the documentation for the $300.
Okay. And that should be made directly to the charitable organization.
Correct. If it's made to an individual, or if it's, like I said, if it's like a GoFundMe page or something like that, that doesn't count as a qualified organization. It has to be, an official charitable organization to be able to count that.
We did have someone in conversation ask about, like, they purchased they got an angel off the angel tree, yes, for example, and purchased a whole bunch of Christmas presents for the child, and would that qualify? And I didn't know the answer.
Yeah, that's unless they donated it directly to the church and right, and then the church took it to them. Then that's probably a no, because it's not really for individuals. It's for actual organizations. Now, if they took money or, gift cards and took that and donated it directly to the church and they purchased, the angel tree gifts, then yes, because, your churches are, an official charitable organization.
Sure.
Yep.
Okay. I usually just tell people to call their tax accountant or their financial planner anyway, but it did spark a thought.
That's right. Well, that's good. That's how it happens. Sometimes you just start talking about different things and things to kind of start popping up and you're like, I don't know about that. So I learn a lot that way, honestly, when clients just bring stuff up and they're like, so-and-so and I were talking about X, Y, Z, and, and sometimes I have to go research it too, because there's just so much information right now, especially for 2020.
Well, I thought this was excellent. Thank you so much.
Good. Well, I am glad. And y'all got any other questions for me?
Diane, did you have any?
Good, because we were fortunate enough to be able to work the whole year. So even though we worked from home, we were still able to work. So we were still able to do everything from home, Yes. We're back in the office now, but we're kind of one of the fortunate ones, to still be able to work and not have to do unemployment or anything like that. So it's good to know. So if we do have anyone that's asking those questions, we can direct them to you.
Absolutely.
And I appreciate the information as well. And about the scams and stuff, there's so much of that going on right now. We have to be so careful with everything, because they'll take every penny that you get, they'll try to take it from you.
Yep, you're so right. And I mean, and this is when it really ramps up because they know taxes are like in front of people's minds right now. I mean, every year I have somebody that comes in just in tears in my office saying, you did my taxes and now the IRS says I owe them $3,000 and they called me and threatened me they're taking me to jail. And I'm like, no. They do not do that. Like I said, they will send you 5 million letters, but they will not call you. They will not email you. I mean, these people have gone as far as they've got, IRS logos on the emails. I mean, it's really amazing how far they've gone, to try to scam people. And it's always this time of year because they know people are getting their taxes done and they know people are concerned about it. So,
well, they're even doing it in letters now because I owed IRS and I've been paying them.
Yep.
But I guess about 2-3 weeks ago, I got a letter from IRS and it was like, well, it doesn't make any sense. I know where I get them from and it comes from particular area. Well, this one came from a totally different area. I'm like, that's not right because I know if they start in one place, they're not going to skip and start going someplace else without,
Yep.
This because, and it was like, I'm not going to even bother to call them, write them, send them anything because I know where I'm getting my letters from and they constantly come from the same place. Yep. And so I'm not going to start sending those people back my information because that's all they want is to take your information and get in and start taking from you. So
exactly.
And so they need to be careful.
If you got any doubt in your mind, Yep. If you got any doubt in your mind, it's like that little voice inside you is telling you something's not right here, then something's not right.
It never is.
Actually, I'd like to piggyback off of that with any scam. So she happened to know where she was getting her IRS letters, but if you're getting potentially scammy emails or you're not quite sure that this really looks like my bank or this really looks like Apple or whoever it is, don't reply to that email or click on those links, but go to a third, like Google, like go find a legitimate number and call the legitimate number to know for sure just say, hey, I got this and I just don't know if it's you or not.
Exactly.
But that's just sorry.
No, exactly. That's so true. So true.
You have to be so careful because they are finding ways to scam you any way they can, and it's kind of sad, but you have to pay close attention to everything you do, especially when it comes to your taxes and all of that. You have to be so careful.
That's right. I always say if these people really put their minds to something positive, they'd probably be billionaires because they're so smart, the ways that they have come up. And they are obviously smart people because they have come up with all these creative ways to get at people. So, I mean, they would probably be like the next Amazon or something if they would use their powers for good.
True.
Absolutely.
It's so true.
Well, thank you again, Tami. I would like to end on a positive note. So if you will share something that you wish the average person knew or the average person would do when they're going to their tax person, what's your best tip or takeaway?
Right. I do have a good tip for this, actually. My best tip, it really is, I know this is going to seem really simple, but talk to your tax person. I get so many people that come in and they have so many tax problems because they never really talk to their accountant. They just kind of dropped a bunch of stuff off and they got it back and they never asked any questions. They never really looked at the paperwork. They never really did anything. And, by just talking and having a few simple questions, I will never forget, this came home to me because I had done one of these seminars for a realtor group. And the guy brought me in his tax return. He just it was that same thing. He kind of had that little gut feeling that he was like, something's just not right here, but I'm not sure what. And, within 5 or 10 minutes of going through his paperwork, I could see a bunch of expenses he didn't take on his rental property. And I was like, well, why didn't you claim XYZ? Why didn't you claim your HOA dues? These different things. And he was like, well, I just dropped everything off and the lady just gave it back to me and said, your taxes are done and that's it. And by the time we got done, I think I had found him like $1,200 worth in a refund that we were able to amend the return and get him back. And, so I know some people it's an inconvenience and they're like, no, I just want to drop it off. I don't want to have anything to do with taxes, and
I don't know. I think for $1,200, I could have a conversation with somebody.
I'm like, but just for having a 5-minute conversation, there's so many things that we can find, to help people out with things. So, so that's probably is my best tip. And of course, he's been my client ever since. What a surprise! But these things happen, and sometimes I think people do get in such a hurry that they're like, oh gosh, just drop it off and go. But just having that little 5-minute, even if it's a little phone conversation. I know with COVID. A lot of people are, dropping off and, trying to limit contact, but, even a little 5-minute phone conversation, you can get a lot out of that. So that's my tip.
Well, that's awesome. Thank you again. This is so useful. I hope a lot of people watch this.
All right, guys. Thank you.